the Electronic Transactions Act, Bills of Exchange Ordinance, Debt Recovery Act, and today we are going to cover in its entirety uh, the recoveries of loans by banks Special Provisions Act number 4 of 1990 as amended by Act number 1 of 2011 and 19 of 2011. All are recoveries uh, of loans by banks amendment acts. This is quite an important area again, a major area insofar as your curriculum is concerned, and also so banking practice is concerned, because this is one of the most oftenly or rather frequently used methods by banks to uh, recover their debts and dues. Right? I think you all, I have already shared with you certain materials for your information. You need to be aware of the sections and the legalities, because this is a law which was or which is rather argued, debated, and lots of disputes occur even as we speak due to its very nature of it. Right? We will see what this is and proceed. And please do ask me your questions, if any. And I don't see much of what do you call clarifications being posted too. But then again, please do participate because this is one area where big weightage, or rather considerable weightage, is given insofar as the exam is concerned. Right? All right. Now, how do you recoveries of loans by banks? Right? I presume all of you all can all have this particular material with you. Again, one of my students, a banking student, they got together and compiled this. I went through this whole draft. So another student like you all, who have already was in my class in a previous one. So thank you for her. Let's see. Recoveries of loans by banks, Special Provisions Act number 4 of 1990. Now, this is also known as Parate Act in common parlance, normally by the banking community, the customers as well as the bankers themselves. And also, Debt Recovery Act and the recoveries of loans by banks, Special Provisions Act, were enacted in Parliament in the year 1990. Series of legislations by the Parliament of Sri Lanka as a growing requirement for speedy recoveries of debts owing to the banks by the customers. So you know by now that we have already covered under the Debt Recovery Act, how is it different from the normal recovery process, and how does it speed up the process? And you would see as students of banking, whenever you refer as Act number 2 of 1990, that's the Debt Recovery Act, and Act number 4 of 1990, hereinafter I will be referring them in such names, so that you will be get familiar with this the terminology. Act number 4 of 1990 is the recoveries of loans by banks. Both were passed a part of one digit, 2 of 1990 and 4 of 1990 of the same year. All right. If you see this act, was provided the recoveries of loans granted by bank for the economic development of Sri Lanka, whereby why do you say economic development of Sri Lanka? Because of the speedier recovery of loans. Right? You can open this particular uh, uh, tute which I've already shared with you. Right. Now this is the amendment act. I will download. No, I have already sent you. Give me a moment until I. Right. So you will have to download yourself. It seems that the act itself, but for the moment, I will present it. Give me a moment until it. You will have to download yourself. It seems that the act itself, but for the moment, I will present it. Give me a moment until it. Right. Okay. Right. So you would see the short title to the act and the longer title to the act. You would see the preamble. It says that the preamble, or we know what a preamble of an act is. An act to provide for the recoveries of loans granted by bank for the economic development of Sri Lanka. So this is one area that we need to keep in mind as to what's the intention of the legislature, what is the intention of the parliament when they enacted this. Rather than going through the normal process, which might be time consuming, or which is rather time consuming and taking quite a lot of time of the bank, the court system, the judiciary. Under this, it cuts short the process. We will see how it cuts short the process. You will have to, unlike in other areas that we discussed in this particular lesson, you will have to maybe keep in mind the particular sections, so to speak, and what the effect of those sections under the recoveries legislation. So I would expect all of you all to turn, because it's quite tedious for me to present the act itself on the screen. So might as well open it up in your individual PCs. So it would be convenient for us to go through this recoveries legislation, right? Let's go through this. Now, you all have heard the term parate before, right? Parate, now as we all know, is a procedure that enables the bank to sell mortgage properties, movable or immovable. It's a must that the bank has a mortgage over the property in order to proceed with this mechanism of parate execution, right? If not for that, you cannot proceed with the parate. Right. Now, the main thing, if can anyone confirm me that you can see the presentation, please? Anyone? Can you all see the presentation? Yeah, right. Okay. Right. Now, uh, it's this mechanism, we call it extrajudicial. What do you mean by extrajudicial? Meaning you don't have to go to courts in order to vindicate your rights. When I mean by you is the other banks, right? Normally, in the normal procedure and the debt recovery procedure, whenever there is a default in any of your accounts, any of the loans or lending, or rather the debts, money is extended by the banks has to, if you could recall, first what we try to do is we discuss that with the customer, then letter of demand sent, and if nothing is forthcoming, we institute action maybe under the normal procedure, plaint, and send notices to the customer through the courts, and the customer comes and files their answer and the trial proceeds. Debt recovery, you would recall, we file plaint and affidavit together with the instruments that is under section 4 of the Debt Recovery Act. We did it last week. The originals of those instruments, maybe the checks, the agreements, and whatever that you rely upon to enforce your debt. And then we file that. And unlike in the normal procedure, the courts doesn't send notices to the other party to file their answer, because the parties don't have a right per se to enter into the case and file answer. What they can do is they can make an application to show cause or leave to appear, right? Then after that, basically the court doesn't send notices, the court send decree nisi. And under section 6, the court, once it receives and hears the two parties at an inquiry, if there is a prima facie sustainable case, you would remember, would either allow the party to enter into the case by depositing the some amount of money mentioned in the decree nisi, or make an order, make such order as to the security may not be in what do you call cash, but sufficient security, maybe a bank guarantee to satisfy the decree nisi, or in the alternative, if there is a prima facie case, or there's a good defense put forward by the customer or the defendant, could uh, could what do you call order some amount as to the security, which is in the at the discretion of the court. Now, before this act came into being, this exercise of parate execution was enjoyed by certain banks, not all. For an example, Bank of Ceylon had this right, because they are coming not under the commercial banks, but they have incorporated by an act of parliament. Bank of Ceylon Ordinance number 53 of 1938. Right, so under section 19 and 20 of the BOC ordinance, they enjoyed these parate rights. Then only this parate rights were extended across board to all banks. Keep that in mind. This is enjoyed by, as of now, by all banks which are registered under the Banking Act, not any financial companies. Only banks enjoy this right. extended, no, it's Act 4 of 1990 extended the Parate rights to all licensed commercial banks under this. Now we will be discussing the salient practical features on this particular act. But before that, certain matters that you need to keep in mind is the procedure. Why am I saying or reiterating on the importance of the procedure is, keep in mind, if the procedure set out in the act is or was not followed as is or particularly 100%, it's going to be a grave defect in the loan recovery process. Or else, in other simple words, if the bank has not followed the process provided by the act, I am deliberately saying this very slowly so that you can grasp this. If the bank has not followed this process set out by the law or has missed to follow certain steps, that will be enough or amount to violation on the part of the bank, and they will be, you call it, they will be stopped. They will be stopped from proceeding with this. Now, coming back to you, we will seize this for a moment. Tell me why the law has given such a strict and a very restrictive, stringent requirement to follow the process for the banks. What can you all tell? Why? Why is Parate process? Why the law has law requires a strict approach on the strict requirement to follow the approach in the act, in the Parate Act. Why? I'm not saying it's not the case in other acts. What I'm saying is, if the bank has not followed or missed a particular point in recovering debt under this, the court will throw out the case. Why? Before, okay, you can give your answers, and even before, if you can answer this question, how is the recoveries of loans by banks act differs on money recovery from other money recovery acts? What's the basic quality? How does Parate Act differs from other money recovery acts? It's a simple question, but vital one. I'm expecting your answers. By now, you should. You've got quite a lot of bankers here as well. This is nothing new. This act was there for the past 3 decades. 3 decades, 30 years. So it's nothing new. Yes. I need your answers. I'm waiting. Why? Keep in mind and never forget, Parate action or Parate execution is an extrajudicial remedy. That's the difference. You don't have to go to courts to recover your money. You don't have to go to courts. That's the only difference. That's the main difference. There are other areas where it differs on the recovery process, but the main difference is that you don't have to go to courts. Okay, then coming back to our truth. Now, right. So I won't read through this once again. However, steps to follow under Act Number 4 of 1990. In very what you call simple language, first, of course, you need to send the letter of demand. Otherwise, the custom there should be a lawful or a legal demand that needs to be made by the bank, right? You can take your parate, what you call Recoveries of Loans by Banks Act, to you, and we will go through one by one, right? Now, Section 2 is very important. Why I'm saying it's very important, you can read it. I prefer that everyone has it with them now. Section 2. Right. Registered address of the borrower. Now, there are certain terms that they use. Now, who is a borrower? First of all, everyone, tell me who is a borrower? It's an easy question. Who is a borrower of a bank? Please send in your answers. Who is a borrower of a bank? Because these are the very points that are argued and is open for dispute and discussion. So, who is a borrower of a bank? Very simple answers I'm expecting from you all. Anyone? Person who requests money, the one who borrows money from the bank. Shifa, yes. The person who borrows money from the bank. What are the types of relationships the bank would encounter other than a customer? So, if a customer, someone who owes a debt to the bank, right? What are the services? Your answers are correct. What I'm trying to get at is, for me to, I will lead the answer. However, it's like this, by asking leading questions. What are the, your answers are correct. What are the basic or services a bank would offer to their customers? Basic ones, normal ones that we all know, basic or whatever, we all know that was there from time immemorial. What are one is uh, what do you call accepting deposits, right? That is one. What are the others? So I've given a start. What are the others? You can unmute and say also if it suits, whatever that is, so that everyone and I hear. What are the other services the bank offers to its customers in the banking industry? Accepting deposits. What else? Yes. Yes, providing loans or lending. What else? Online transaction services. If I say Krishni, online transaction services, I would put it into the general service of allowing the customers to, do whatever the transactions. It may be online or physical with the accounts, right? What else? Correct. What else? What else? Is it only accepting deposits and lending money? Nothing else? Bankers? What else? No idea. What about owning facility? Good. It's more or less lending, but a little bit different because of the nature is such that now pawning, strictly speaking, it's lending. But by having jewelry or gold or whatever valuables as collateral, you advance money. Uh, what about safety deposits, lockers, right? They provide that also, safety deposit lockers. Anything else? There's lot more, lot more. With what we've discussed, money exchange, very good. Guarantees, very good. What else? Very good. What else? Some of the basic areas also we have not mentioned still. What else? Trade remittances. Yes, we are going there slowly. Remittances. What else? Think, think, think. So, like I said, you have all the liberty to unmute and give your answer also. Trade financing? Forgotten. International trade financing, documentary credits, all these are facilitated or done by the banks, right? LCs, letter of credits, whatever. So all those matters are there. So in all these instances, you have your customer. End of the day, it's your customer. But at sometimes the customer is your borrower. Sometimes the customer is your principal and you are the agent of the customer. Sometimes the customer is your creditor and you are the debtor. That is when you accept deposits from the customer. Then sometimes there is a bailey concept, right? You are the trustee for certain what you call valuables or monies of the customer. These are different types of relationships the bank has with the customer. Now, you sometimes when you right, you get guarantors also to guarantee the money of the borrowers. But borrower itself is different. Now, borrower, like you correctly said, is the person or the customer who borrows money from the bank, right? Now, when you turn to section 22, covered a little bit on this. A bank means a licensed commercial bank within the meaning of the Banking Act, other than the BOC, People's Bank, any bank established under the Regional Rural Development Bank Act and shall be deemed to include the Development Finance Corporation Ceylon, right? So they have their own acts in place to ensure that they also have parate rights, right? Uh, Under their own respective laws which they have incorporated. Uh, Then we come to section 2 again with regard to who's a borrower. Now we know who's a borrower is who has borrowed money from the bank and not anyone else. Borrowed money. Every person, that is the reason why I'm reiterating on this. Every person to whom any loan is granted by a bank on the mortgage of property. Now, let that sink in. Every person to whom any loan is granted by a bank on the mortgage of property, or who has obtained probate of the will or letters of administration to the estate of a person to whom any loan has been granted by a bank on the mortgage of property, or who upon application made in that behalf by the board has been appointed by court to represent such estate. Now this estate means the estate of a person that needs to be administered after the death of the person. Don't get confused and worried with the technicalities and the words that I've used. Estate means in Sinhala you call it Budala. Right? Once a person dies, you need to administer the estate. That is covered under the Civil Procedure Code. And if your estate is over, the value of the whole or entire estate is over 4 million, you have to see if you have left a last will, you have to divide the estate according to your last will. If you are, irrespective of the value of the estate, if you don't have a last will, then they look at the value of the estate. If the value of the estate is over 4 million, you have to, whoever who wants to have an interest in the estate, to apply to courts to administer it, right? And settle whatever the remaining amongst the beneficiaries of the estate. That is the legal heirs. Naitika urumak karuwan atara. Now, let's say your customer, one of your customers who was a borrower, died with a last will or without a last will. Let's say, insofar as this is concerned, let's say with a last will. The person who applies, now in the last will it says who is responsible to execute the last will, produce you to the court and manage that affair is called the executrix. Executrix. This is a view. Right? Now, assuming that the deceased person drew down a loan and there's a sum outstanding, let's say, of 2 million, that 2 million, how can the bank claim that 2 million? Bank has to claim that 2 million not from the customer, because the customer is already dead. You have a claim on the estate of the deceased customer. So how do you make the claim? You can make the claim to the executrix or to that particular case which he has already filed, the testamentary actions, right? Budal Nadur. You can make your claims. That is why they have covered here who has obtained a probate. Probate is where that the executrix will produce the last will to the courts and obtain a probate, you call it. Or probate is more or less like a license to divide the property according to the will and report to court, right? So to that person. Then thirdly, the borrower means person who has borrowed money, or if he is dead, who has obtained the probate, that is the executrix, or to whom any right, title or interest whatsoever in any property mortgage to a bank as security for any loan has, it should not that, it's passed, whether by voluntary conveyance or by operation of law, shall register with the bank an address to which all notices to him may be addressed. Now, voluntary conveyance. For an example, right title or interest whatsoever in any property mortgage to a bank has passed. If the mortgage property is, let's say, husband and wife, husband is the borrower, no children, they died, the husband died, and the wife is living there in the borrowed property, what you call mortgage property. Then she becomes the borrower as well, right? To whom any right, title, or interest whatsoever in any property mortgage to a bank as security for a loan has passed. So that property which has been mortgaged to the bank should be passed to that this particular person, which they explains under this limb 1C, right? Now this act covers only these borrowers, property of these borrowers, no one else. Keep that in mind. That's very simple. Keep that in mind, right? And then subsection 2 goes on to say that any notice which is required to be served on any person to whom subsection 1 applies, simply saying one of those three persons mentioned in subsection 1, shall be deemed to have been duly served on that person if it is sent by post of registered letter directed to that person, right? Because now that particular previous section requires that they registers or shares an address with the bank to whom the emails be sent to. So whenever a communication under this act is made to that registered address of the borrower or borrower, which whoever of those three persons, the borrower himself, the executrix, or the person whom the property has passed to, if communication was sent through registered post, that is a deeming provision, you call it. The law deems that communication is made. Now, you use this act, don't forget, when there is a default of the loan and you want to recover the money. You have a security, speedier resolution, you need speedier recovery, you require, right? Then, it goes on to say, once, so where such, the bank shall publish in the Gazette and in at least three daily newspapers in Sinhala, Tamil, and English language. So, in addition to the Gazette, at least three daily newspapers in Sinhala, English, and Tamil. A notice addressed to him. That is where there is no address, right? So, if there is no address, the first thing is the bank shall, it's a deeming provision that the bank will, any notice to be sent to the registered address, right? And that subsequent service shall be deemed to have been effected at the time at which the letter would be delivered in the ordinary course of course, provided that where any such person fails to register his address, there is no address, what the bank has to do is publish that notice which the bank intends to send to that particular borrower on the Gazette and at least in three daily newspapers in English, Sinhala, and Tamil. Notice at that particular notice, once they do that, it is deemed that that person has received, right? Now, what needs to be done when there is a default, right? What needs to be done when there is a default? Let's see. There is, right. before this section. Here. Whenever a default is made on any loan, either on principal or interest or both. So a borrower might be in default of the capital outstanding or the interest outstanding or both. The board of directors may at its discretion take action to adopt a resolution, you call it as the terminology used, adopt a resolution or pass a resolution, authorizing any person to auction the property mortgage in respect of the amount due to the bank. This is covered in section 3, which we just read a moment ago. Action by board where default is made. So whenever a default is made in respect of payment of any sum due, right? Any loan, so on account of principal, interest or both, right? On the unpaid portion, the board may pass a resolution to this effect. Now, who is a board? What is a board? What do you mean by the board? You all have to answer. What is a board? What is a board? You will have to answer. Yes. Lakmal, Krishni, Inoka. What is a board? In common parlance, in common words, in common sense, which is quite rare to find these days. That is a board that this act speaks of. Remember, never forget. The meaning of the term board is given under section 22 under the interpretation. In relation to a bank means the board of directors of the bank or any body of persons by whatever name or designation called for the time being charged with the management or administration of such bank. Now, funny thing happened. There is this foreign bank in Sri Lanka. Don't ask me what the name is. They have a branch office in Sri Lanka, and then they wanted to start this parate execution or under the what do you call recoveries of monies lent under this particular act. So they passed the resolution, and they wanted to have this auction. Auction date, just before the auction date, they get a stay order, a restraining order from the Commercial High Court of Colombo. What is that? It is restrained on the basis now that the resolution they have said to be passed and sent such notice under section 2 to the borrower was not passed by the board of directors because this particular bank, the main branch, or rather the parent, what they have in Sri Lanka is a branch office. So the board of directors sits in the parent bank or the parent branch, which is not in Sri Lanka but in another country. So what do they have here? They don't have a board of directors, they have an executive committee. Executive committee here is not board of directors. They are the direct reports to the CEO here, but they are entrusted with the management of the bank here in Sri Lanka. Now this restraining order said that insofar as the act is concerned, there should be a board resolution. But you all have not passed a board resolution. The resolution you have passed is not by the board of directors. Hence, this action that you are trying to do, that is selling the property by public auction, is invalid. What is your take on that? What is your take on that? Now, go and read the definition given for a board again. In relation to a bank, board of directors of a bank or any body of persons by whatever name. The board means board of directors of a bank or any body of persons by whatever name or designation called for the time being charged with the management or administration of the bank. It's very clear. Simple, literal interpretation. You don't need any other interpretation for that. When the meaning of the term is clear, it need not be board of directors only. It can be it can be any other body of persons. Whatever name you call it, may be executive committee, may be other committee, this committee, that committee, but who are entrusted or charged with the management or administration of the bank. Not a department, not a section, but this body of persons who sits together, who are entrusted with this duty to manage the bank. If they pass as a resolution, that's good enough. Right? Right. So, Section 3 requires that the board passes a resolution and take such action as specified either in Section 5 or Section 4. Provided, however, that where the board has in any case taken action or commenced to take action, in accordance with Section 5, nothing shall be deemed to prevent the board at any time from subsequently taking action. In that case, by resolution and Section 4, if the board deems need and advisable. We'll see what the Section 4 and Section 5 says. Now, Section 4 requires that, however, subject to certain provisions provided in Section 7, the board may by resolution to be recorded in not willing writing authorize a person specified in the resolution to sell by public auction any property mortgaged to the bank as security for a loan, right, together with money, cost and interest recoverable under Section 13. So what you can recover is covered under Section 13. Please keep these sections in mind. It's very important. That's why I'm going to word. In that resolution, these are the ingredients. Keep that in mind. That resolution may be passed by the board of directors. Board means the board of directors or any body of persons who are interested in managing the bank, whatever name they are being called. That is covered under the interpretation, definition clause and Section 22 of this particular act. Now, say you know Section 2. Section 2 requires that Section 2 requires that the borrower, who is a borrower needs to register an address with the bank. If they have not registered, whatever the communication would be deemed to have been made if the bank gazettes and publish in newspapers as required. So if the action the board needs to do is they need to pass a resolution, right, and take such action under Section 4 or 5. Section 4 says authorization of sale of mortgage property. How do they do that? There is a proviso, Section 7. They can recover the amount which they are able to recover under Section 30 and name such person who is authorized to sell the property, right? sell by authorized by specified interest to sell in public auction. Prasiddha Vendesiye. Right. Then section 5. So section 4 is there. Board resolution can be proceeded with under section 405. Right. Section 5. Authorization of manager to take possession of the mortgage property. So again, section 4 and 5 both are subject to whatever it contains in section 7. We'll see. Board by resolution recorded in writing authorize a person specified in the resolution to enter upon any immovable property mortgage as security contravene and so enter upon and manage and maintain such property. Under section 4, authorize such person to sell the mortgage property. Section 5, authorize a manager to enter into the property, manage and maintain the property, and to exercise the same powers in the control, fine management of such property as might have been exercised by the mortgagor itself. So you get the bank gets the power and authority to get into the shoes of the borrower and run the business if it's a business, right, on the property. Whenever any sum of money due on any loan granted by an agricultural industry undertaken on the security of any plant machinery, right? The board may authorize any person specified in writing to enter and take possession of such agricultural whatever that plant and exercise the same power in the control and management of such property been pledged or mortgaged. So the difference is the first instance it may only be a straightforward matter, but if it requires, it's an industrial or agricultural undertaking, the bank manager doesn't have the knowledge or the expertise to run that business. So the bank may in that resolution empower any person, right? Any person, you can see that the board may authorize any person specified in writing to enter upon that property, right? Then you come to the next step, procedure where the manager is appointed, right? Right, before that, procedure where manager is appointed. So any person is authorized by the board under section 5. Under section 5, you can appoint a manager. Keep this in mind. Section 4 and 5 serves for two different reasons. If you want to sell the property, you go under section 4. If you want to enter into the property, manage and continue with the business or whatever, you go under section 5. So under section 5, that particular person who is empowered by the board resolution to enter into the property will also have the power to sell the produce of such property. If there is a what you call production, he can sell the produce of the property, sell the goods manufactured wholly or partly to receive the rents, profits. Basically, he gets the authority and the powers of the borrower as the owner of that property to pay the expenses incurred upon and control the premises, income from that property to appropriate to himself out of such income and remuneration for his services, because this person is now appointed as the manager of that particular property, right? Right, of that property. Give me a moment. Right. Then to remain in possession of as well in the property. So every person authorized by resolution under this particular act shall pay monthly out of the income to the mortgagor is the bank. Pay quarterly or the board. So you have to pay back the board. Now the bank has a what do you call employed a person to work on behalf of the bank. Now this is a defaulted non-performing loan. Bank has to recover some amount of money from this, right? So something is better than nothing. Now you remember section 4 and 5 is subject to section 7. Section 7 provides the instances where the borrower is dead. If the borrower is dead, notwithstanding that he has died, right? The bank can proceed with section 4. Just whatsoever property mortgage the bank as security for the loan have passed by voluntary conveyance or operation of law to any other person. Section 2 shall apply in case of any defaulter is dead. Where a borrower is dead and probate of his will or letters of administration not been issued, the District Court of Colombo, to which the property mortgage is situated, may, upon application made in behalf by a bank and after service of notice, the court may order that the grant of probate and letters of administration is unduly delayed, appoint a person to represent the estate of the borrower for the purpose of this section. The provisions of section 4 shall not apply in case of any default made by such borrower unless and until a person is appointed under this subsection to represent the estate of such borrower. Now, you need to, once if the borrower is dead, yes, you can do that, but then again, you have to make an application to the district court where the testamentary case of that borrower is being filed. That if there is an undue delay which is happening there in the appointment of the executrix, remember section 2 executrix, to appoint such person to continue with this action, right? To get into the shoes of the borrower until that time. Notice of resolution. This is important. Every resolution should be published in the Gazette and at least 3 newspapers in Sinhala, Tamil and English. Section 8 provides for this, right? We'll see what section 8 says. Once that is published in those, copies of such notice, right, very important, should be dispatched to the borrower under section 2, the address given in section 2, if he is alive, and to every person who has in respect of that property registered his address as required by section 2, and if that property consists of an interest of a lessee under a lessee from the state to the land commissioner, right? So if it is what do you call being leased out to the state, for an example, the agricultural ministry, some time back, the property that was leased out to it. For example, if it was to be parat executed, the bank should send notices to the borrower plus to the land commissioner because the state is a lessee there, right? Understood. Then, notice of sale. So, notice of resolution, first the bank should send. After that, that is under section 8. After that, the bank should send the notice of sale, which and should be published again in the Gazette and 3 daily newspapers at least 14 days before the auction. Right? So, you need to notify the borrower of the resolution, then you have to notify the sale at least 14 days before the auction, either by Gazette and daily newspapers right? Not either. So it will be under section 2 and posted on or near the property which is to be sold. You can, they put up banners near the property saying that ප්‍රසිද්ධ වින්දේසියේ විකිනීමට නියමිතව ඇති ඉඩමකි වෙන්දේසි කරන දිනය මෙදා මේ වෙලාවට, all these details are there in that. So that is to satisfy section 9 of this particular law. Right. Now, this takes some time in practical sense. Now, if the borrower pays the amount at any time before the sale, the bank has no right to sell it. Section 10. Now, where section 10 says is, if the borrower pays the entire defaulted amount, capital plus interest, the bank has no right to sell it. Right? If the whole of the unpaid portion of the loan together with interest, monies and cost, recovered by board under section 13, extended any time before the date fixed for sale, the property shall not be sold. Shall not be sold. Bank don't have a discretion. Bank can't sell the property. No discretion. Bank can't sell the property. That's it. Right? And no further steps shall be taken in pursuance of resolution under section 4 of the sale of the property. Bank can't do anything about it. However, the amount of the installment in respect of which default has been made and of the monies and cost, if any, recoverable. Now, here, this is what it says. Assuming there is a loan of 10 lakhs, right? Assuming there is a loan of 10 lakhs and who is this? Assuming there's a loan of 10 lakhs and the borrower has paid 3 lakhs, already paid 3 lakhs, and his installment is, let's say, 50,000, right? Monthly installment is 50,000. Capital outstanding to be paid is 7 lakhs, right? He defaulted on this 50,000 easiness of understanding. I'm giving this straightforward example, right? So 10 lakhs is the entire loan amount, out of which 3 lakhs have already been paid during the monthly installments, and he has defaulted on 2 installments, and the capital outstanding now has to be paid is, so 2 installments outstanding, 50,000 and 50,000, and the entire amount of outstanding is 7 lakhs. Because now he has defaulted this 50,000, and the other 600,000 capital outstanding. Under section 10, if he pays that entire 7 lakhs, bank can't take any action. 7 lakhs plus interest and cost, whatever. If he pays the 2 defaulted outstanding amounts, 50,000 and 50,000, that is 1 lakh, plus the interest and the cost, the board may have a discretion whether to sell the property or not to sell the property. Right? So if the board decides not to sell the property, if he has only paid the, defaulted amount, the board can decide. So they have discretion there whether to go with the auction or not. That will take in personal substitution for sale of that property. Here, practical sense, we need to keep in mind bank's business is banking, not taking over property. Property is being taken over. Let's say you have give a loan to a customer. Customer is paying healthily. Something happened. Customer get defaulted, and you want to auction the property and get the land is not the answer all the time. It's a fallback. It's a security. It's not the business of the bank. This bank is not in real estate business. Bank is in banking business. yes, if you don't have any other choice, fine. But then again, the bank should always try to see if there is a settlement, if there's a win-win solution for the issue. Sometimes if certain customers are genuine, something happens and the customer is not in a position to pay the loan, hence they get defaulted. So as a result, uh, bank should see and conduct their due diligence to see whether this is a habitual defaulter or not. If it is not, the bank should try to come to a solution amicably on a settlement plan rather than taking all these properties and lying them in the inventory. What is the use to the bank? That needs to be taken into account. We are learning the law with regard to recoveries, but we need to be practical at the same time. I know personally banks do that, the recoveries department and everything. So they don't take loans for granted. So they need to be aware as to what the course of action that they will be taking insofar as a recovery of this particular loan is concerned. They should be aware as to what route they are going to take. So if there is a possibility of them recovering that or settlement, so to speak, they should they should try that avenue as well, right? Then we go to, so you understand, any questions up to now? Any questions? No questions? That means you have understood everything. Yes. Wow. We have quite a considerable number of people today joined with us today. Right. So getting back to our discussion, then we see, we go to section 11, again a very important provision called upset price. Anyone, I presume everyone has heard the term upset before, who have realized. Nevertheless, now in that resolution, you remember the resolution passed by the bank to sell the property in section 4 or section 5, right? And then notice of sale, notice of the resolution, and notice of sale. So two things, right? Notice of resolution, notice of sale. Selling that property. Authorizing the sale, right? It will mention an upset price, or you call an upset price, where the board will fix an upset price sold to any person other than the bank to which the property is mortgaged. Now here what you need to keep in mind is, let's say the value of the, let's say the loan is 10 million. Value of the property is 15 million. The loan is in default, outstanding is 9 million, let's say. The board will fix an upset price. They will, when they are to determine what the upset price is, what they will have to keep in, what they will be considering is, they will see the loan outstanding plus the interest plus the cost of this recovery. And then they will arrive at this figure called the upset price. It may be, let's say, 9.5 million or 9.8 million. Then they, in that resolution, they will say this is the upset price. So under section 11, the board will not sell the property in public auction if they receive a bid below 9.8 million. Right? What will happen if they receive a bid below 9.8 million? They will not sell it, but they can transfer that to the bank. They will not sell it below the upset price. Also, under section 12, in the event if there are several loans of the customer, and if customer get, let's say customer has two loans, one is 10 million, another one is, let's say, 5 million, and the loan of 10 million is defaulted, there is, the bank can consider that there is a cross default, meaning that all, even so 10 million loan and 5 million loan, the customer has only defaulted on 10 million loan and the 5 million loan is performing. But the bank has the option to consider that there is a cross default and can deem that all loans are defaulted. In any case where two or more loans have been granted by the bank on the security of the same property, however, security of the same property, default is made in payment of any sum due upon any one or more such loan. The foregoing provisions shall apply, notwithstanding default may not have been made in respect to the other loan or any other loans. Board may pass the resolution under section 4 to recover the whole of the amount. Right? So nothing in section 3 to 5, both sections 15 inclusive, will be read to construe as prohibiting a bank from recovering the amount due on a mortgage loan in accordance with the provisions of any other written law. Now keep that in mind. So if there are two loans, however, the property, same property has been mortgaged, there is no default in one loan and only default in the other loan, the bank can consider both have been defaulted. Then recovery of expenses and costs, you remember, and when you pass the resolution to sell the property, you take into account what you can recover, which is covered under section 13. This is what you can cover. In addition to the amount due on in loan, the board amount or any other person, all monies expended by a bank in accordance with the covenants mentioned in the mortgage bond. So basically, mortgage bond covers the sun, moon, and the stars, and everything that the bank can recover, right? The payment of premium, any other charges, interest of policy of insurance, right? All such costs, charges incurred by the bank for recovery, everything is covered, right? The cost of advertising, the sale and the selling of the mortgage property, the auctioneer's fees, the premises, to all other incidental expenses, the bank can recover. So the cost of advertising, but the costs incurred under the advertising and the auctioneer's fees and all those, the bank should, there should be a tab placed in where the bank should not allow such costs to exceed a certain percentage, which should be specified in the resolution, right? So section 1 to 13 we have covered, and a little bit more. All these sections, keep that in mind, are imperative. If you fail to follow a single section, it's going to be detrimental and the bank is going to get severely affected, right? Section 14 we come to now. If the mortgage property is sold, right? Mortgage property is sold. Take the example I told you. Value of the property is 15 million. mortgage bond is for 10 million because the loan was for 10 million. Loan outstanding as of default is 9 million, but with the interest accrued plus the costs, it came up to 9.6 million, let's say. And the bank resolved, resolution passed, sent to the customer, notice of sale sent to the customer, right? Notice of sale, the date and everything. Then auction was conducted. Assume the property was sold, the market rate is, I said 15 million, forced sale value. You have the market rate in a particular land, you all know this, market rate, forced sale value is anyway less than the market rate. That is, you want to dispose of the property quickly. So if that is the case, the cost is, it will be a lesser amount. Let's say the market value is 15, the forced sale value would be about 13 million, right? Let's say the bank sold the property for 13 million. Now, what's the excess amount? Excess amount is now the bank wanted to recover 9.6 million. It's 3.4 million, 34 lakhs. So what does the bank, can the bank keep that money with them? No, they can't. If they keep it, they are doing something illegal. So payment in excess. Bank shall, after deducting from the proceeds. So with the example I gave, 9.6 million, after deducting 9.6 million, shall, look at these words, pay the balance remaining, if any, either to the borrower or any person legally entitled to accept the payment due to the borrowers, or where the board is in doubt as to whom the money should be paid, shall be paid to the district court in which the mortgage property. That comes in the event the borrower is dead, because the bank, the board doesn't know to whom the money should be, the surplus money should be paid to, right? So it shall be paid to the borrower or any person legally entitled to accept the payment due to the borrower. Any person legally entitled to accept the payment due to the borrower. Keep that in mind. After that, you come to section 15, where a certificate of sale shall be issued by the bank to the successful purchaser when the property is sold on the resolution passed by the board of directors at the public auction. Certificate of sale, right? Now, on the fall of the hammer, he should pay 10%, and there are percentages. We will go through that. I think I covered that already. We will go through anyway, right? So they shall provide, issue a certificate of sale. Board shall issue a certificate of sale. All the right, title, interest of the borrower to and in the property shall vest in that purchaser. Thereafter, it shall not be competent for any person claiming through under any disposition whatsoever the right title. So the certificate of sale is very important, right? Of the property in any court to move. So nobody can go and challenge that certificate of sale provided in accordance with this law. That certificate should be signed by the board under subsection 1 shall be conclusive proof with respect to the sale of any property. Conclusive proof. Right? It should be provided. Right. If the purchase is some person other than the bank, the certificate shall be substantiated as a prescribed format. Right. There should be a there is it's liable for stamp duty as if it's a conveyance, right? if the land under lessee from the state, then the land shall not be signed by the board. The certificate of sale shall not be signed by the board until and unless they get the okay, approves the purchaser. The land commissioner approves the purchaser. If the land commissioner refuses, all sums paid to the bank by the purchaser of the sale shall be repaid to him by the board. So there's an overriding right to the state, right? The purchase of any immovable property sold in person preceding provisions of this act, once they get the certificate of sale, they should produce it to the district court in an application under summary procedure, that is under section 380 onwards, 3 onwards, and entitled to obtain the delivery of possession. Now, he has the title to that, but he needs the possession. In order for him to get the possession, he need to file the certificate of sale together with a petition and affidavit to the relevant district court in where the land is situated, and then only after the order of the court, take the possession of the land he purchased. That is covered under section 16. Right? Right. Where then right, certificate of sale. Then we come to cancellation of sale. That is covered under section 17, where the property has been sold, has been purchased on behalf of the bank. Where the property sold has been purchased on behalf of the bank, the board may at any time before it resells that property cancel the sale by an endorsement to that effect on the certified copy of the certificate of sale. If there's a cancellation of sale by any whatever means, for an example, if it's been leased out to, as an example earlier we mentioned, to the land commission and he doesn't approve that, then there's a cancellation of the certificate of sale, right? So that he will make an endorsement on that certificate of sale. Upon the borrower or any other person on his behalf paying the amount due in respect to the loan for which the property was sold or seized and sale. So there also the borrower and any person can come and pay the money and get the land. That's also fine, right? Resale by the lender. If the property so sold has been purchased on behalf of the bank and the sale is not cancelled under section 17, the board may at any time resell the property and transfer to the purchaser by endorsement on a certified copy of the certificate referred to in subsection 3. Right? The other important thing is where it is covered, where the bank is the limit on retention. If at any sale in person of the preceding provision, if the bank has purchased any property sold or default, the bank cannot hold such property for a longer period than it is necessary to enable the bank to resell the property, where the bank can recover the total amount due to the bank. Now, this is a very wide and but practically inconclusive provision, because what do you mean by not any longer period than it is necessary? So it's all circumstantial and subjective, right? So offenses, any person who without reasonable cause resists, obstructs or prevents a person authorized by the land by a resolution this shall be guilty of the offense. Now that is where the regulation is concerned, the law is concerned, you need to know that's the process, right? However, at the same time, you need to know So we covered this. Bank, we covered this. I'll come to this. And right. Now, keep this process in mind. If you want, it will be very handy. You have a chart and draw this process in a chart so that you won't forget it. Very handy here. Keep this in mind. This particular law was amended in the year 2011, like I mentioned earlier, right? Give me a moment. Like I mentioned earlier, by Act number 1 of 2011 and by Act number 19 of 2011. There, the legislature restricted the operation of this law to a some amount of money over a particular figure, that is 5 million. By Act number 1, I think we have opened Act number 1. No, not this. I think we should open Act number 1. What you need to keep in mind is they have amended. What is this? Not this. Run by banks. Act number 1. Right, this is Act number 1. By Act number 1, they inserted a new clause as 5A and said, with regard to where they said the banks can't restrict it. If the loan amount is 5 million and low, you can't go under this act, right? Then we had an issue back in 2000. What do you mean by the loan amount? It was not covered. Then that was again clarified or amended by Act number 19. Let's see if it is. Act number 19. Here it goes. Again amended. Now this is one of the most shortest acts. It amended the amendment in done by Act number 1. What did it say is, now there was a section introduced as 5A. No? In 5A, no, let's see. Right, 5A. No action shall be initiated in terms of Section 3 of the Principal Enactment for any recovery of loan in respect of which default is made. No initial steps be taken on Section 4.5 where the amount of such loan is less than rupees 5 million, provided that at the time of default, When calculating the amount due and owing to the bank on the loan granted as default, the interest accrued on such loan and any penalty imposed thereon shall not be taken into consideration. Right? At the time of default, when calculating the amount due and owing, that means outstanding, due and owing to the bank, you shall not take into account the interest accrued and penalty imposed. But by Act number 19, there is an ambiguity there. What it said was, what it did was, they said, hereby amended by substitution for the word amount. In the words, they wherever you see the word amount, you have to say principal amount borrowed, right? Principal amount borrowed. So principal amount borrowed is where, for an example, then you read this as like this: no action shall be initiated in respect of default made of any aforesaid act where the principal amount borrowed of such loan is less than rupees 5 million. Provided, however, that at the time of default, when calculating the principal amount borrowed, due and owing, so you see, due and owing, principal amount borrowed, due and owing, I will share with you certain case laws where what do you mean by principal amount due and owing means the principal amount outstanding. Example, let's say you principal amount borrowed means principal amount due and outstanding as of now. You borrowed, the customer borrowed a loan for 10 million. Customer borrowed, forget about that. Customer borrowed 4 million. That's clearly out of the purview of this act. Customer borrowed 6 million and principal amount borrowed is 6 million. However, at the time of default, the amount outstanding is 4 million. As per this amendment, 1 of 2011 and 19 of 2011 read together, you cannot use this Parate or Recoveries Act because some amount outstanding, the principal amount borrowed and the principal amount outstanding now is less than 5 million. So how do I? It was decided in this particular case. I will share with you this case. How do you share? Anyway, I'll ask the institute to share this case with you. I'll give you the case references. SC Appeal 53 of 2017. Sumudu Sanjeevani Nanakara versus HNB. You can write these references down. And later on, I'll ask the institute to share this with you. You can write this down. Then you have to also keep in mind now this what the bank can auction by public auction the property of the borrower. If let's assume if the borrower borrowed some money by giving as collateral of a property of another person who is a guarantor and who is not the borrower, then the bank cannot auction that property by public auction. That is there's a decided case Ramachandran versus HNB. right? In that particular case, it was decided that the property that can be auctioned is only the property of the borrower and not anyone else. Because when you look at section 2, it's section 2, it says who the borrower is, right? And when you look at section 13, no, section 14, if there is an excess of money, you have to return it to the borrower or any person authorized by the borrower. So, if you sell the property of a guarantor who is not the borrower, and the excess according to this act should be given to the borrower. So that cannot stand. And under section 2, you see that registered address of the borrower. Whatever the notice of sale, you have to send to the registered address of the borrower or any person under those three limbs. So, not to the guarantor. So, Ramachandran versus HNB, again I will give you these references, decided that you can't go through public auction if the property so auction or property so taken as collateral is in favor of the is owned by a third party other than the borrower. So you call them third party mortgages. But that was in 2006. In 2007, there's another case, HMB versus Samatapal Javadana, right? Where the borrower was a company, the property mortgage was owned by the director shareholders of the company, the husband and the wife. Now, you know by now, a company, private limited, is a separate and a distinct legal personality. Right? In this particular situation, they took up the position that this is a third-party mortgage because the mortgage property was not owned by the borrower, which is the company. It was owned by these two particular individuals who are the director shareholders of the company. Right? So, those are, insofar as legality is concerned, two different personalities. However, the courts lifted the corporate veil than that instance because it's the husband and wife. They said, despite the loan was taken by the company, the two director shareholders benefited out of that loan. Therefore, despite it's a separate legal personality, you can't take this as a third party mortgage. Therefore, what the bank did as auctioning the property was in order. Right? I will share with you, I will send the institute the case references. Must be having that also. Give me a moment. Ramchandran. So all these cases were took up by the courts together, right, and decided as one case. Right? Reset. I can't seem to send. Wait, I'll send one by one. Yeah, I have to send one by one. So all these cases were taken separately. Then however, there is this is just because the court said in this particular instance that they lifted the corporate veil, meaning considering that the borrower is the company and the shareholder directors are one of the same person. It is not a standard interpretation that was peculiarity only to that case. There are instances. Keep in mind the 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 decision made in this case, which I just shared with you, Chellaya Ramanathan versus Hatton National Bank case, stands because lifting of corporate veil is an exception done at exceptional circumstances, not anything else. For example, let's say the company is there, it's a limited company, and there is a director board and shareholders of about 20. You can't say and one of the shareholders has given his property as collateral. You can't say it's one of the same person. That's a wrong interpretation, right? In support of that, I'm giving you this case. Yes. The answer. No, not this. This one. Yeah. DFCC Bank versus Vaливita Kushmita Mudit Pereira. This is SC Appeal 150 of 2010, right? Where the court decided, right? Read these are very important. DFCC Bank versus Vaливita Mudita. Where the court decided that there was a it's that the Chellaya Ramanathan case stands. That was given by a full bench, five bench judge, five bench decision. And here it reconfirmed that, saying that you cannot always say that third party mortgages here where it's given to the company and the shareholder is the let's say only shareholder director, that it's one and the same person and you can lift the corporate bill. No, you can't do that. Because in this particular case, there was a specific clause in the mortgage bond stating that the company shall not, wait, I'll read that. The benefit, the company shall not benefit. Give me a moment. Yes, there was a clause to the effect that said the company should not utilize any portion of its funds in the loan to the benefits of its shareholders. So, having said this, you cannot consider this as a to lift the corporate way, because there it specifically says. So that is a third party mortgage insofar as then the court or anyone can't say the shareholder benefited out of this. Then you can't hold this. You can hold this as a third party mortgage. Any questions? That's about Parat execution. Any questions? No. So we can wind up for today. Unless there are any questions, of course, you can relay it to me through the institute, or you have my address. We will call it a day. Thank you.